everyone, and this video I'm making it because I feel like everybody in this first video of the beginning to advanced series, whereby I'm trying to take beginners and making them advance. So I feel like I didn't explain each and everything in the first video. So in this video I'm gonna be teaching you guys the basics. The basics is market structure and point of interest, demand and supply zones. So basically the market structure is telling you how the chart moves, how the price moves in the chart with on whatever pair you trade. So the point of interest is the two turning points, the peak point and the low point. When the price starts from the bottom and then it moves, this is the turning point. You determine if this is the turning point, should price go back or starting to have a rejection at the top, then that is a turning point, which is the second point from the down point, if it makes sense. So this is a demand zone, this is a supply zone. I'm gonna be covering all that in this video, and how price really moves in a zigzag motion but in a vertical line. So let's get into it. As a beginner, you may get into your metal trader and see the charts moving like this, and then ask yourself, what's going on? Well, that's a market structure. It basically shows the price between two pairs and how it really moves. It goes up, down, up, down, up. And as it does so, a breakout structure occurs, and then a retracement occurs, and then it buys. On the chart, it looks like this. Simple. So basically, that's how this market structure is, and price really moves. Simple, isn't it? Yeah, it is. Now let's move to the second point. Point number 2 is the point of interest. What's really the point of interest? I've just showed you guys, and in the last clip, how the price really moves. And right now I'm gonna show you guys how to apply the point of interest in the right way, which is a demand zone and a supply zone, and how price really works. How price really works is it goes from the bottom when it's in a bullish run, and bullish means buy, right? Bearish means sell. When it's in a bullish run, price goes up, the vertical zigzag line. It goes up, creating breakout structure and retracements, and then buys. Right at that highest point, it is where there's a lot of rejection to the upside. Price signifies or shows you how that is a supply zone, which is point interest number 2, and this is point interest number 1. This lower point where price started, right? So I'm gonna be showing you guys how that really works. My goal right here, I was also a beginner, and I'm trying to make it as simple as possible for each and everybody for this trading. So I've made a couple of profits, and yeah, I'm still broke, you know what I'm saying? But I'm trying to teach each and everybody, because it's not easy trying to gather information by all yourself without nobody trying to show you. Instead of these gurus, I'm doing it while broke and sharing you guys the knowledge. It's not about the status, it's not about what I look like, it's about the knowledge that I have. So if you're smart enough, you're gonna listen to what I tell you to do, and if it works, you stick to it. If it don't work, you find someone guru who's trying to explain it to you how it really works. So everybody, I just explained to y'all what the market structure is all about. So this is how the demand zone work. So on this 4 hour, for those who like to trade inside day, I'll say inside 1 day. So we go to 1 hour in advance, or sometime soon I'm gonna tell you how this works though. So this, I'm gonna mark it green, or with another color. This is a supply zone. Now it's red. It's just red. This is a supply zone, and we're gonna do it the same. This is the last lower point. Yep. This is the last lower point. Price rejected there, and then make it market shift, and then retest it there. So this is the demand zone. I'm finna market green. Finna market green, bro. Finna show y'all why I'm saying that. Now we go to the line chart. To the line chart. This within a day, right? This is a 1 hour time frame, bro. Line chart. This is how it works. This is the last lower point, because when price was selling, this was the last higher point to the downside, which confirmed to us that it is a market shift. I've already explained what the market shift is in the video, and this is the higher point that confirmed for the market right now. This is the higher point that confirmed the market shift right there. This is the highest point. See where y'all see where I'm marking it at. So this is the price from, this is the last higher point from when price was selling. It was decreasing. So it confirmed that price has shifted from sell to buys when price broke out of here, confirming a market shift, which is a change in direction. So this right here confirmed a break of structure, which was driven down by this low right here. So this low right here confirmed this break of structure after a change of direction, which is it confirmed that this break of structure is legit. Confirmed this break of structure, which was this last high point before price had to decrease and then break. So price bought, and then it ended up right here. This is the turning point. Signal is showing us that this is a supply zone. Price gonna start selling up there, and we already had 1, 2, 3, 4 rejections to the upside. Price is rejecting the point right there, confirming that this is a supply zone. So price will now, we're looking for sells if you can into a sell move right here, right here, right here. You can enter a sell move right here, and then your take profit can be at this demand zone, because price will have right before breaking at that last rejection high point with 4 rejections. Price would have to trigger buy orders at this demand zone, meaning those unfulfilled buy orders are now waiting to be fulfilled by this sell upcoming move, and break above those high 4 rejection points right there when it comes and then reverses from at this point. So that's basically how point of interest work. Point of interest is the point where price rejects, and this as a whole is a market structure. Market structure is telling us about the direction of the current pricing. You see, it's not as confusing, yo. Yo, I just want to say to everyone who managed to finish the video, I just want to thank y'all, and not just really thank y'all, but thank y'all for trying to invest your time into learning a skill that finna make your life better. And I've came far with this, and I've loved to help more of you. And if you leave a comment in the comment section saying that you want the free training, the free education in the Telegram, I got a Telegram group, and as my description say, man, don't you quit, bro. And it will take a lot longer than it actually took me, bro. But I'm willing to show you guys that you don't gotta start with a personal account. And I strictly saying this, you should do it on a demo account right before trying into your real money to manage your emotions and to be perfect in your psychology, so you can get used to seeing huge numbers and just be non-reactive. I don't know how to put it, but I'm trying to teach you guys, and use as you see my screenshots there. Those are profit screenshots. I've lost a lot of money in the personal account because I had to find my own. I'm broke and stuff. But right now I'm doing profits, and you can check my next video. I mean my last recent video about my profits and what I do for profits. As always, we'll meet at the top.